Today, I'm going to help you answer a crucial question. Can you sell your business and retire? As a certified financial planner, I often hear from many business owners and they feel stuck in their business. They're tired and they can't work another day and they're eager to move on. But how do you know if it's the right time? In this video, I'll address 5 critical questions that will help you decide if it's the right time to step away from your business and move on to the next chapter of your life. Whether that means retirement, whether that means spending more time with your family, traveling the world, or giving back to other entrepreneurs, these 5 questions will give you a roadmap to retire on your terms. So let's dive into the first question you need to ask yourself to determine if you're ready. How much money have you saved so far? This is a crucial starting point because the biggest hurdle many business owners face is having enough investable assets to replace their current income after they leave the business. So, do you have a pension, Social Security, 401ks, IRAs, or real estate? Many don't know where the money will come from to support their lifestyle after an exit, so get familiar with what assets you currently own. The higher your savings and investments outside of the business, the less dependent you'll be on your business to fund your retirement goals. Number 2, how much money do you need in retirement? Now that we've figured out what our current assets look like, we need to consider how our cash flow will change transitioning into retirement. If you want to maintain the lifestyle you currently have while working in the business, you need to figure out how much you need in assets to provide you the income stream to continue living that lifestyle. So for example, if you currently bring home $150,000 a year through salary, through benefits and distributions from the business, and you want to maintain that standard of living, you'll need enough assets and income sources to provide you with $150,000 a year. To give you an idea of how much this requires, we can do some quick back of the napkin math. Assuming a 4% portfolio withdrawal rate to bring home $150,000 a year, you would need over $3.7 million in assets. And for different income levels, $200,000 a year in income requires a $5 million portfolio. $250,000 a year in income requires a $6.25 million portfolio. And finally, $300,000 a year in income requires a $7.5 million portfolio. So keep in mind, this is simplified math. It doesn't include investment returns, Social Security, taxes, or the proceeds from selling your business, which we will touch on next. However, it does highlight the importance of saving and investing for your future. When we do the real planning for clients, we use software to crunch the numbers and do customized projections. So maybe, perhaps on a different video, I'll do an actual case study and we'll see how that happens. Now that we have a clear understanding of what we have in assets and how much we need to meet our desired retirement income, we can determine if there is a gap. This leads us to the third question: do you need to sell the business to help fund your retirement? If there is a gap, meaning we're falling short of having enough assets to provide the required income stream, we have 3 choices. We can save and invest more, we can increase the value of our business, or we can do both. And honestly, for many small business owners, it's usually going to be a combination of doing both. Unless we've been saving and investing for a long time and we've accumulated enough assets in investments or real estate to provide the necessary income stream we need. It's crucial to understand your current financial position and make adjustments accordingly, because if you wait too long and then you start the plan, it's very difficult to catch up if you're behind. Number 4, will a sale affect your personal tax planning? Without proper tax planning done well in advance, this will almost always be a yes. And here's why. A business sale is subject to long-term capital gains taxes at a rate of 20% plus any state income taxes depending on the state you live in. For example, a $2 million sale instantly triggers a $400,000 tax liability, and this doesn't even include state income taxes or the 3.8% Medicare tax. So as you can see, this can add up very quickly. And if not planned for in advance, the net amount after taxes and fees could be significantly less than what you expect. So proper tax planning is essential to ensure you're financially prepared for retirement. Finally, consider how you will manage your investments post-sale. The net proceeds from selling your business will most likely be invested in taxable accounts, individual accounts, joint or trust accounts. So for many business owners at this point in their lives, it's not about trying to get the highest return in the market anymore. Investing $500,000 is very different than investing $5 million. So the strategy becomes more about protecting your wealth and what you've built. Aligning your investment strategy with your goals to provide a sustainable and reliable income stream becomes the highest priority at this stage in your life. So by answering these 5 questions, you'll be better prepared to decide if it's the right time to retire from your business and move on to the next chapter of your life. So thank you for watching. If this video was helpful, subscribe to the channel and I'll catch you on the next one.